Welcome back to Money Exchange. Let's take a look at one of this week's big currency movers, and I'm referring to the British pound. This is one of my favourite currencies because for the last couple of years we've seen a real significant improvement in the UK economy, and we've seen unemployment drop down now to around 5.6%. We've got wages growth recently ticking up to 3.2%, which was a really strong move, and that was a strong move that the Bank of England wanted. Of course, UK interest rates from the Bank of England that have been down at 0.5% for 6 years now. And you've got to look back to when the global financial crisis occurred back in 2008, because in February 2008, interest rates in the UK were about 5.25%, similar to Australia. And of course, we're sitting right now on an interest rate of 0.5%. So the British pound in the last couple of years, really since around 2013, 14 and now into 15, has really started to move quickly. And we're starting to see some appreciation against any of the major currencies that have either got low interest rates, the potential for lower interest rates, or a monetary policy program of printing money. But if we have a look at some of the data here, we've got UK growth at the moment running at annualised 2.9%. We've got an unemployment rate of 5.6%, wages growth of 3.2%. I do acknowledge that inflation is near zero, and an unemployment rate at 3.2, as I said, and a central bank rate at 0.5%. Now, right now, we're seeing big money start to come for the pound simply because they're seeing the Bank of England look towards raising rates either later this year or early next year. And that's the reason why I want to talk about three currency pairs tonight. The first one we're going to look at is the pound against the yen. Now, we've seen a significant appreciation on this currency pair in the last couple of years, and I think we've still got further to go. I personally have a target of around 214. So the pound against the yen, 214. We've got a Bank of Japan printing trillions of yen, trying to get inflation to 2%. So we're likely to see, if rates go higher in the UK and the yen continues to depreciate because of the money printing at the Bank of Japan, which I think they'll have to increase the amount of money they're printing in the coming 6 to 12 months, we're likely going to see appreciation there. If we move on now and we have a look at the euro against the pound, we've got a program at the moment with the European Central Bank printing a huge amount of money over the coming 12 months or so, over €1 trillion in fact, until September next year. That's they've got in place at the moment. Now, if we have a look at the chart there on the screen, over the last couple of years, we've seen a significant depreciation in the euro against the pound, and that's only likely going to continue if we see strong economic data out of the UK and we continue to see poor economic data out of Europe. And we even saw last night inflation tick down in Germany just a little bit. Now, the final one here I want to touch on is the pound against the Aussie. Obviously, we've seen the Aussie dollar come off in the last couple of years because we saw interest rates dropping, the economy here starting to soften, rates came down, and we're sitting at the moment at around 2%. Again, I think this one's still got further to go. This one, I think, have got a target of about 2.40. So £1 to buy 2.40 in the next year or two. Only if interest rates in the UK do rise over the next 6 or 12 months, which I very much expect them to rise, and interest rates stay low here in Australia. So that's my big money move.